Hello traders, Gary Wagner here, just about 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, 9th day of June, 2020, and this is the Daily Report for Gold and Silver. As the FOMC meeting for the month convened this morning, it will conclude tomorrow. We did see a second day of rising gold pricing. Yesterday, we identified a simple two-day pattern called a bullish harami. Requires confirmation. We actually got that confirmation on today's higher price. The question that we need to ask ourselves is, because gold has been so range bound, are we looking at a buy trigger that might only take us about $15 higher? We really need to see gold break above, call it 1750, maybe even 1760, to show that we're in a defined breakout and moving to much higher ground. Because until that happens, we are sitting in a range that's between 1680 on the low side and 1750 on the high side. Let's take a look at our price board, and then we'll talk about that range in detail when we pull up our technical studies. Traders, for the second day in a row, we have seen moderate moves to the upside in the precious metals, specifically gold itself. In fact, the rest of the complex, silver, palladium, and platinum, did trade lower on the day. As you can see, that gold futures, this is basis the most active August contract, gained $14.70 and is currently fixed at $17.1980. Spot gold gained about a full percentage at $17.1490. That puts it up about $17.20 on the day. And when we look at platinum, that was down slightly, down about $1.40, $859.80. Palladium, that was down about $67 at $1969.60. And lastly, silver. Silver did take a decline in the tune of almost a full percentage point, call it 0.9%, a decline of 15 cents at $17.74. And all of that was aided by dollar weakness, which continues to fall, now at 96.38. Traders, we're looking at an interesting scenario in which we have now seen the second consecutive day in a row where we have had gold trade higher. That all began when it hit this low on Friday. Of course, this low took us well below 1700 to 1671. This is Friday's action, and it was a strong down day, breaking below what we had been marking as a critical area of support, and it was a basic trend line that was created by looking at a series of higher lows that came in beginning really at the end of March, beginning of April right here. And at this point, we had this market come up. And then the secondary line that we used was this low that was here. So this low here and this low here. And also, it really followed very closely to the 50-day moving average. Then, of course, as I said, we broke hard on Friday. When we look at yesterday's candle, it really is a bullish harami after a defined downtrend. You get that inside trading day. Today, we actually got confirmation of that pattern because, one, we broke back above this resistance line, which is the former support line, and secondly, we traded above the 50-day moving average. There is only one real caveat, and that caveat is that we can honestly say that this market has not been a trending market, but rather can be defined as a market which has been trading within a pretty defined range. That range is about 1760 on the top and 1775 on the bottom. So that I am definitely a buyer of gold should we see a strong breakout above 1760. But my fear is that if it opens and it moves in stronger here, we might only see this market move as high as this area or before falling back into this channel that has been so prevalent. And that was the reason that we did not issue a buy signal today, is I really want to see it break hard below this particular line or hard above this particular line. And as of yet, we still remain range bound. And traders, the only real caveat to that stance, the neutral stance we have been maintaining, is if something is said tomorrow, either in the statement released by Federal Reserve members or the press conference held by Chairman Powell. Because without that, my sense is that we are going to maintain ourselves really in a range that we can call, let's say, 1750 on the top to about 1680 on the bottom, this sideways range that we really need to see it break out. Because remember, we had this compression triangle. This came back in April. We did get a solid break above that. That took us to the secondary high of the year. That came in at 775, this being the high of the year. But from there, we did not make a lower low than we had seen. We did not make a higher high. And it has truly traded back and forth between this channel or sideways trading activity marked by, as I said, 1680 on the low and approximately 1750 on the high. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow, Fed Day, for the next daily update and review. Bye-bye.